Hello, hello. Hope everyone is doing well. It is 7:18 p.m. Monday, November 14th, here for the post-session recap video. So we had spoken about this in the pre-market analysis that we had no data coming up in the New York session, so we were expecting a potential low volume start of the week as we start getting some more important data starting on Tuesday and Wednesday and for the rest of the week. So no economic data for traders to price in. So primarily playing the sentiment from last week's drop in inflation that sent optimism throughout the markets with this impulsive new higher high, uh, with the drop of the CPI to 7.7%. So that was taken as heavily optimistic, and we had some bullish structure maintain the following day. And in today's session, we were mostly flat, but we did get a slight continuation, very short-lived, as we had a late day sell-off, but the sell-off just came to retest its previous lows. So this is characteristic of a ranging market here, indecisive. So far we are still holding the bottom side of this range, and optimism is still holding the most weight, but we did have, as expected, a low volume day. So when your expectation of low volume and volatility, you either stay out of the market or adjust yourself accordingly and potentially just take some short-term scalp trades, knowing that moves like we had on CPI day are unlikely without some new catalysts, right? So we're playing the market conditions. And similarly on the US dollar, identified also some slowdown in volume and volatility as the bear market has been printing significant lower lows and lower highs off of that optimistic sentiment. We retested previous higher time frame liquidity level around 106.5, and we had a jump to start the week here and started creating a bit of a demand zone here at the 106.5 region, creating some consecutive higher highs and higher lows here, but just retesting and rejecting previous sell side liquidity on the intraday time frame. And the results over the New York session, we had some weakness, a pullback here for some further weakness, but just kind of like not breaking below this key level and not breaking above this key level. So I was looking at these levels here, 107.3 area, to validate dollar strength coming back and breaking out of that intraday range and potentially getting a pullback, or breaking back below this demand zone, breaking back below 106.5 to validate further sell side liquidity getting injected into the market here, with more optimism being confirmed with this bear market. But so far we did not break above or below. So again, just stuck within this range. So low volume, low volatility, no real movement as the market's just consolidated for the day. Having said that, there was an opportunity to have a short-term scalp here on gold. On gold, we do see that we've had a strong inflow in buyers from the 1620 lows, printing some consecutive higher highs and brief pullbacks, or mainly just consolidation areas before making new impulsive higher highs again. Tight consolidation order block, new higher highs again. Now we're maintaining this bullish structure, so we had a bullish bias, playing that optimistic sentiment and playing the buyer strength here. And as for trade ideas prior to the session, we did identify that we had a slowdown. So from the structure here, these higher highs, higher lows, higher high here, we failed to create this a support above the structure. Instead, we started creating some bear structure, and we had this rejection wick around 1766 create these new lower lows, but the buyers bought that up right around the 755 key level and started breaking above that 1766 wick rejection here, flipping now this corrective structure and now continuing that bullish momentum. So the idea was if we can break above this 1766 key level, we are likely to continue at least to fill the top of this range here, which is still a 60 or 70 pip range, which is more than enough to catch a trade. So looking at the 1 minute time frame here, this was the ideal setup in my books here, as we had the idea was I wanted to confirm a breakout above 1766. So start of the New York session, we were slowly chugging our way to the upside, but no trade yet, as we're still below this previous key level. Only when we started having this order block here, this sort of higher high, higher low, into the breakout, now we created, in my eyes, a nice area of liquidity to take a trade on the retest here, and taking a break, retest of the order block, and continuation here, and we had a nice clean move above this level. So again, identified this for zooming in here. We got a nice little tight order block from 1765.5, and we had the breakout here, buyer strength breaking above the 1766 level. And once we came to retest that level around 1765, we had clean rejections and bulls take over to that next zone. We had a 3-to-1, and we went all the way up to about 95 pips before aggressively rejecting this area and coming back within this range. So there was definitely a short-term, short-lived scalp opportunity, but with a decent risk reward that for me was a very favorable trade to take. Again, taking advantage of the optimistic sentiment, equities holding structure, DXY holding bearish structure, and gold being bullish and very strong buyers observed on the higher time frames. And we have a clean price action confirmation of this break and retest in order to take, again, short-term scalps, because we are adjusting to the slow volume market conditions, as the dollar again is still ranging but within bearish structure. Equities are still ranging but within bullish structure. So if we have a setup, we're looking for short-term scalps, and this was a great opportunity here. 60 pips to the next zone, 3-to-1 with a 20 pip stop loss. Very, very smooth trade, and that was it. Nice start to the week.